The latest news at the Shanghai Gold Exchange, the world's largest physical gold market, is launching new offshore vaults in Hong Kong, Singapore, Zurich, and Dubai. This isn't just expansion, it's a bold move to reshape the gold trade, challenge Western dominance, and accelerate China's push for a yuan-driven world. So as gold surges towards $4,000 an ounce and central banks continue to hoard reserves, what does this mean for markets, investors, and the global balance of power? Here to decode this major shift is Dr. Nomi Prins. She's a former Goldman Sachs managing director, the best-selling author of Collusion and All the President's Bankers, and the founder of Prinsights. She's also a fierce advocate for financial transparency. Nomi, always good to see you. Welcome back to the show.
Thank you so much. So many exciting things going on at once.
Yes, exactly. And that's why I wanted to get your opinion on what I see as these new gold hubs that aren't just vaults. I see them as a declaration the global financial order is tilting, and the West may not be ready. Am I wrong here?
No, that is absolutely right. It is an actual tilt. It's a time zone tilt. It's a geographical tilt. It's a power tilt. And it's not going to stop. We're tilting towards a non-U.S., non-Western focus on not just the accumulation of gold. We've been seeing that in central banks around the world, particularly led by China, but not exclusively throughout the BRICS community, throughout Eastern Europe and so forth. But what China has been doing is very carefully sequencing a set of moves that really started about 10 years ago with its adoption, the yuan's adoption into the SDR, into the IMF's currency basket for the first time. And all of the moves that have happened since, the accumulation of gold, the deceleration of purchasing of U.S. treasuries and dollars, the now physical push behind a vaulted, digitalized in terms of technologically advanced vault system to accumulate gold buying, gold storing, and gold's future into the East. This has all been part of, I don't want to use the term plan in terms of master plan, but definitely strategy to move the center of gold and therefore the center of trade, of currencies, of solidity, of jurisdictional neutrality into more of an Eastern focus.
Yeah, wow. I was going to ask you, what are the main strategic goals of them establishing these offshore vaults in, Hong Kong, Singapore, Zurich, and Dubai? If I had to ask you to pick the main driver of what they want, is it de-dollarization? Is it, breaking free from a U.S. dollar dominance?
It is both of those things. It's the accumulation of power through both of those things and through the accumulation also of gold, of a diversification towards the dollar, yes. Western currencies, yes. Gold is now the second most held reserve hard currency in terms of all central banks globally, just behind the dollar, ahead of the euro as of this summer. And it's the idea of centralizing power through the accumulation and repositioning of where gold is stored, how securely it's stored, how it's not touched by not just the dollar, but Western policies. This is about a redistricting, really, of the globe around the hard currency of gold. And it's one of many strategic moves by China and by non-U.S., non-Western nations, although some Western nations are, of course, also accumulating gold in the wake of all of this. We know gold is not magically moving past 3,900, but there has been a solid purchasing of gold by central banks, by Eastern investors, by now Western investors starting to get more on board with it. But it's about power. It's about saying, look, we want to have the ability to create this overlay of hard currency, which is gold, whether it becomes a gold standard or whether it's simply the idea that gold in central banks means solidity, mean power, mean dollar diversification. That's what China wants to do. And it's put a lot of money behind this. And there have been steps that have moved towards them courting foreign central banks around the world to store gold in Shanghai or in these new hubs via the Shanghai Gold Exchange, the SGE, and other mechanisms.
Naomi, all very well said, and it seems that China is marching full steam ahead with this plan and is having success thus far. The West, are they not seeing what's happening, and what could they do possibly to deter China's plan?
Well, they are, I believe, seeing what's happening, but they are slow to maneuver towards purchasing. Of course, the U.S. has a stockpile of gold in general, but it doesn't use it in terms of central bank solidity like China is doing, like Russia is doing, like other BRICS nations is doing, and Eastern European nations are doing. So there is an awareness. For example, we have seen that gold is now considered a critical mineral in terms of how the White House views gold relative to tariffs and in terms of excluding certain gold purchases from general global tariffs. And that was a move that happened after they were included and they were excluded because someone in the White House was like, wait a minute, we need to be able to actually have a flow of gold that isn't taxed at a ridiculous rate. So there is an awareness, but I think it's an awareness after the fact. And as a result, China's had this head start, particularly again over these last 10 years, and more so since the Russia invasion of Ukraine in 2022, when it was basically seen by Russia, by China as one of its partners in trade, that at any point in time, currencies or bank accounts can effectively be frozen. And if you have a physical stockpile of gold that can physically be maneuvered into liquidity at any particular point, well, then you have the power to circumvent such external hits to your policies, to your power, towards your economies.
And this is going by what they're even disclosing. I mean, is it not true that everything that's mined in China stays in China, Nomi?
A lot of what's mined in China does, not everything, but it's true that whereas they are disclosing certain reports, we've seen every month this year they purchase gold. They purchase gold basically over the last 18 months in terms of what we know transparency-wise, month by month. But there's definitely, these are just what we see. The reports in terms of physical gold, of investments in mines. And this is actually a key development that's happening. It's not that every single piece of gold mined in China stays in China, but it does mean that they do have a facility with respect to their state-owned banks, with respect to their central banks, so their whole financial system, and their retail buyers and investors and customers of those banks, where they're effectively pushing the purchasing of gold throughout the entire country. And as a result, not just of that, but also their idea of expanding their power over gold in general, they have been buying or investing in mines close to their jurisdiction. So what we're starting to see is more and more investment, for example, in Australian gold mines than in the past, because they're sort of close ish in jurisdiction relative to, say, ones in Latin America or South America, though they are also still pushing to have pieces of those. So they're buying gold sort of future supply, as well as actively setting the stage for the vaultage and the storage of gold in terms of current supply.
Nomi, so that said, what impact will these new hubs have on the global gold market, especially in terms of pricing and market influence traditionally held by, places like the LBMA, by Western centers like the LBMA? So talk to us about pricing and what it means for, like I said, the LBMA here.
Yeah, so I mean, LBMA definitely has the current lock, and it has the quality lock in terms of the way in which its regulations persevere over the quality of gold that's used in transactions. And the Shanghai Gold Exchange and the other mechanisms that China's been building and investing in will also have a very high quality, high grade of gold. They're not actively interested in competing with low grade. So what that's going to do is it's going to generally increase the trading of high quality gold around the world in terms of time zones, in terms of physicalities, in terms of storage. Now, when you look at some of, for example, the Middle Eastern nations, whether it's Saudi Arabia, whether it's Iran, who we don't even actually know how much gold they're officially buying because it's not all exposed or transparent, but you see nations moving their gold supplies more away from London and into Shanghai, into Singapore, which is another big evolving gold hub, in order to be able to achieve that jurisdictional neutrality, to basically keep their gold away from other policies that could impact them. And so what does that do for the price of gold? It lifts the price of gold up because what you have is more demand around the globe and you have more stored gold. So once you're taking gold out of supply, two things are happening. One is there's not enough supply to basically meet the demand for gold in general as we move forward. And that, just by general economics, will have a factor of moving gold upward in terms of price. But you also have more gold locked away. So the idea of keeping gold locked away in secure vaults in this growing regional zone also means you're taking physical gold out of the physical market. And so that also creates an additional demand versus supply edge toward the demand for gold. So now you want more gold to basically accumulate into that stored supply, into that vaulted supply. And then you have the idea of timing. More countries, more institutions, more high net worth individuals, more family money groups have the access to an entirely secure additional time zone element to buy gold. And that creates more liquidity for gold and it creates more availability of trading for gold. And so what we'll see probably is more of the volume moving towards these new hubs as all of these things happen, each of which are positive for the price of gold. So the fact that we've seen gold now like 3,900s as we speak, we have forecasts in the beginning of the year 4,000. We moved our forecast for this year to 4,500. But we are basically seeing a massive push towards the east, which is going to entail more demand for gold and less supply physically relative to what's underground. So therefore also more demand for miners of high quality gold projects.
Wow. And by the way, congrats on calling, $4,000 gold back in January. And like you said, you've moved that target to 4,500 for the year. Is that by year end, Nomi?
By the turn of the year. So our original forecast on 4,000 was end of 2025, beginning of 2026. So now for that turn of the year, we're looking at moving towards 4,500. There's rebalancing that happens towards the last month of the year and the first month of the year. So we look at it just sort of,
And as we're speaking, silver's still ripping here. Are you as bullish silver?
Yeah, so we had called silver at 50 also at the beginning of the year, and we haven't yet, but I'll say it here, we are looking at moving it to 60 by the end of this year for not the same reasons as gold. Obviously, part of the silver attraction is the fact that it has a historic link to gold, and when gold moves up, it tends to move up more securely than silver, and then silver overtakes it, and then silver all of a sudden overshoots it. Silver has had some headwinds in terms of economic growth and industrial need, but it's also now seeing a lot of tailwinds basically from countries like China, from countries like India in terms of solar and new wave type of energy, and also in terms of our own infrastructure, in terms of building plants, in terms of building out our energy grids, and that also requires copper, but silver is a component of that as well because of its conductivity. So we're going to see that demand on twofold basis for silver, from an industrial capacity need. Again, not enough supply in the ground. We're at a 2-year running deficit of supply in ground versus what we have available, and moving in terms of its relationship to gold as gold continues to move up. So we're in a definite not just bull market, we're in a new cycle in terms of a bull cycle for these precious metals, for their geopolitical uses, for their trade uses, and for their physicality.
Really good stuff. Dr. Nomi Prins, since you're so good with your calls, let's just end it on this because we threw a lot of information at the people. Tying this back into China. If you and I were at a coffee shop right now and I was like, Nomi, in your gut, do you feel that China's financial reach is just going to overtake the globe? Do you really think that's where we're headed?
I think think it definitely is heading towards that. And not just China, again, China and its partners. It's very methodical. It has been ahead of the curve in all of these hard assets in terms of its build, in terms of its strategy. There are moves to catch up with that, of course. Europe's way behind. The U.S. is trying to get on board. But definitely China has at this point, a tailwind towards accumulating partnerships and power.